Hello everyone, this video is to quickly go over Chapter 21, Disposition of Partnership Interests and Partnership Distributions. There are three main topics covered in this chapter. First, we're getting into the disposition of partnership interest. Based on the transaction, you probably already realize there are two parties in the transaction, the selling partner and the purchasing partner. From the selling partner's perspective, we're going to recognize the gain or loss. And the calculation, there's two parts. One is the capital gain loss recognition. The other part is ordinary income loss recognition, ordinary gain or loss recognition. So when I go through the steps and figure out how to recognize, how to calculate the gain or loss, and how to characterize the gain or loss. From a purchasing partner's perspective, they're just simply taking on the partnership interest. So their outside basis will be their cash paid plus a liability assumed, and their inside basis will be the same as the selling partner's shares inside basis. Essentially, they're stepping into the shoes of the selling partner. So there's not much going on at this point for the purchasing partner. For the operating distribution of a property, from a partner's perspective, there will be only gain recognition when only cash is distributed. The loss recognition is not allowed, and the reallocate in, if there's other property involved in the distribution, the partner is required to reallocate the outside basis to the distributed assets and a continuing partnership interest in a particular order. So when we get to the exercise, we have to kind of work through the steps in the calculation to figure out how the basis is allocated in a particular order. For liquidation distribution, this is something it's a different from the operating distribution is because in the liquidation distribution, that's the final distribution. So it represents the partner's final buyout, and after the liquidation distribution, the partner will terminate his or her interest in the partnership interest. Um, so in this final distribution, the gain or loss will be recognized if only cash is distributed. However, if only cash and hot assets are distributed, in this case, then the loss can be recognized. In all other scenarios, the partners are required to reallocate their outside basis to the distributed assets in a certain order. So the calculation is getting a little bit more technical when we get to the third scenario here. But the good news is for partnership level, generally speaking, there's no gain or loss recognition. Pretty much it's untouched, and really, a lot of the tax implications happening at the partner level regarding those transactions. Okay, so now let's get to the disposition of partnership interests. There are three steps calculation involved. So in this case, I think the exercise, the homework, or the examples presented in the book kind of laid out the three steps in this calculation for the partners. So the partners, step one, they have to figure out the overall gain or loss. So that's similar to the property transaction. You're going to look at the amount realized minus outside basis in the partnership interest and to figure out the overall gain loss. Then the second step, and it's really kind of the key here, it's essentially is calculating the partner's share of gain loss from the hot assets as if the partnership sold those assets at their fair market value. So this portion represents the ordinary income of the gain or loss. And once we figure out step two, then the remaining gain loss will be treated as capital gain or loss. So really the key step in this calculation is step two. So how to identify the hot assets and how to apply the gain loss from the hot assets, gain or loss share, from the partner's share, to figure out, the ordinary gain loss portion. And once we figure out step 2, then the step 3 is pretty simple, straightforward, because the step 3 is basically saying using the gain loss from step 1 minus the ordinary gain loss from step 2. So essentially, where we characterize a portion of the gain loss to the ordinary gain loss, then the remaining will be the capital gain loss. Then it gets to the question, what is hot assets? Hot assets in the textbook, they have a lot of definitions discussed in the paragraph. But at the end of the day, really the hot assets represents any assets which can trigger ordinary gain loss recognition if the partner if the partner is selling those assets at a fair market value. So which includes the receivables inventory plus any Section 1245 recapture in equipment or tangible assets. And the goes back to the disposition of partnership interest. The purchasing partner, generally speaking, is pretty straightforward. The outside basis will be equal to the cash paid plus the share of partnership liabilities assumed. And the purchasing partner will step into the shoes of selling partner in terms the inside basis and the tax capital account. And the partnership, generally speaking, there's no impact on the partnership's inside basis in its assets. And the partnership tax year closes for the selling partner only upon the sale of partner's entire interest. And there could be some partner income loss allocation implications due to the varying interesting rules, because the partner could dispose interest during the year. So there's this twist to it, is how they're going to allocate the interest, how they're going to allocate the income loss for each portion. Okay, now we get to the operating distributions. This represents the proportional operating distributions. So the partnership, generally speaking, does not recognize a gain or loss on the distribution of property or money, and the partnership's basis in its remaining assets remains unchanged. That means the partnership's inside basis will not be impacted due to in the remaining assets. Basically, any assets which have not been distributed will be the same. Pretty much, there's not much going on at the partnership level. From a partner's perspective, generally speaking, they do not recognize any gain or loss when they receive the distributed property or money. The exception is the partner will recognize a gain when the distribution is more than the partner's outside basis, and the outside basis cannot go below 0, and the partner has to recognize a gain to the extent of the money distributed that is greater than the outside basis. And if the money distributed is less than the outside basis, obviously the partner will deal with a return of capital, so all the distribution will be tax-free, and in that case, they will never get to a loss recognition situation. And for operating distribution, including property, generally speaking, the partners are required to reallocate their outside basis to all the distributed assets, including money, and their continuing partnership interest. That means there is a likelihood there could be some leftover in the outside basis. However, the rule of thumb is still the same. The partner's outside basis cannot be below 0 at any point in time. So there is a certain order in which to allocate the outside basis to the basis of the distributed assets. First, they're going to allocate to the money received, then to the property, other property as a carryover basis. This carryover basis means the partners takes the basis in the distributed property equal to the partnership basis in the property. So it's basically the inside basis in the property. And the remainder is the partner's outside basis after the distribution. So it's a tiered approach. So when you go through the homework, you want to kind of go slow on this calculation here and really figure out how this calculation is done. For the liquidation distribution, there is a lot more going on here, depending on whether the partner's outside basis and is is more or less than the partnership inside basis. The treatment is slightly different, but generally speaking, the partner and partnerships do not recognize gain or loss. And there's several exceptions. Partner recognize a gain when the partnership distributes money only, and the amount exceeds the partner's outside basis in the partnership interest, and the loss will be recognized when the two conditions are met. So then, when there's a distribution assets only cash and hot assets, and the partner's outside basis exceeds the sum of the basis of distributed assets. And to be clear, if the partner distributed money only, they could recognize a loss as well. But when there's a cash and hot assets involved, the partner can only recognize loss, but not gain. And the third step is if there's other property in addition to the cash and hot assets distributed, the partner can reallocate the entire outside basis to the distributed assets the partner received. The allocation will depend on the two factors, depending on whether the partnership's basis in the distributed assets, how it's relative to the partner's outside basis is more or less, depending on what it is. The calculation is a little bit different, and also depending on the type of the property distributed, and whether it's money, hot assets, or any other property. So again, the calculation for liquidation distribution are is pretty complex, and there's just lots details there, and deserve a special attention. And for the disproportionate distribution and special basis adjustment, this is something just for your reference, for your reading purposes. We're not going to get into the calculation here, and this is just for your reading. Again, for this chapter, we're going to focus on the dispositional partnership interest and a proportionate operating distribution of property and a liquidation distribution of property. So really the key here is, as you can see in the beginning slides, is the gain loss recognition and the characteristics of the gain or loss, if there's any gain or loss recognition, and also the basis for the property received in the distribution, as well as any outside basis change due to the distribution. Okay, now I'm going to bring you quickly over to the chapter 21 homework simulation Excel template. So I have 4 calculation problems kind of listed here, and this is all from your homework connect homework. And for homework 36, this problem 36 is a sale or partnership interest, and 38 is a sale or partnership interest as well. So they're very similar. So the first step is to figure out the overall gain or loss. The second step is to figure out any gain or loss related to the hot assets, and the third part is to figure out the remaining gain or loss. So in the back end, I do have a template for the sale or partnership interest. Try to help you go through this kind of like the different steps in the calculation here, kind of laid out what step in each step, what calculation involved. Try to be more comprehensive and in this calculation, because in some of the homework you may not need to have all the calculation happen, because some of the numbers will be given to you. For instance, in the homework, a lot of times they will just give you what is the outside basis before the sale, um, and but this just kind of expand the calculation a little bit more and kind of show you all the elements involved in this calculation, but the steps of the calculation are laid out in a way to kind of show you the logical uh, flow of the calculation. So take a look and see whether this will help you solve a problems 36 and 38. Problem 41 is simple pro rata operating distribution calculation. Again, the requirements will be focusing on the partner's recognized gain or loss, as well as the partner's remaining basis in the partnership interest. In other words, their outside basis, and as well as the partner's basis in the distributed assets for the assets received during the distribution. So this is something it's a will be similar to the proportional operating distribution. So you can take a look and plug some numbers and see. And for the last question, this is a liquidation distribution. As I mentioned in the slides, the liquidation distribution is always a little bit more complicated. In that case, you can see here I built a template for four scenarios for liquidation distribution scenario A1 and A2. This represents when the partner's outside basis is greater than the partnership's inside basis of the assets. And the scenario A2 and the scenario B1 and B2 represents when partner's outside basis is less than the partnership's inside basis. All the simulation is tied to the example in the book, and it could help you to see how the calculation is done uh, in a more condensed manner. So if will help you, go for it. If this is very confusing, feel free to just walk through the steps in the homework or connect a video. Either way, the homework I have here, 48, is it's a relative simple scenario. It does not get into too much complication here. But if you want to spend more time and digging into the mechanics of the outside basis allocation, take a look of the four scenarios I listed here. Okay, thank you so much for listening, and you all have a great day.